Hi guys, this is Dean. Today we're gonna look at the countries tab in Koyfin. Now before we start, I would like to tell you that you can get 20% off Koyfin paid plans in the link in the description. So the countries tab in Koyfin is a pre-populated, pre-built market dashboard that is already made and given to you by Koyfin. You don't have to build it yourself. You can't edit it, but it's pretty good anyway, so you don't have to edit it. The only thing I could say is maybe you could add more if you could, but you can't at the moment. So if you want to add more elements, you'd have to build your own dashboard mirroring the existing one. Now, what is this dashboard? Basically, you have a bunch of ETFs, okay, country ETFs. And you have the ticker right here. I believe most of them are from BlackRock. These are iShares ETFs that are trying to represent a country, which is slightly different than the index or the indices that you have for these countries. First of all, there's way more countries than in the World Equity Indices page. And the indices represented in the World Equity Indices page are not exactly the same as the country ETFs, right? The constituents within those ETFs will be different. The country ETF will be, the constituent will be selected by the issuer. So in this case, BlackRock. And they can be misleading. For example, we will see in Europe there is the Ireland ETF, not necessarily a great representation of the Irish economy. Actually, when you look inside the ETF, there's not many companies, and the few Irish companies that are there are kind of have most of their operations in America or somewhere else. So it's not really representative of the Irish economy, the real underlying situation over in Ireland. Now, you have to bear that in mind when you're buying one of those ETFs. You really want to go and look what's inside the ETF, because the idea of, oh, this is an ETF that represents that country can be a bit misleading, right? It's a bit of marketing, guys, right? So let's have a look at what we have. First of all, it's broken up by continent. We have the Americas, Europe, Asia Pacific, and Middle East, Africa. Let's start. I've selected everything in America. As you can see, there's a couple of more LATAM countries, right? We have Argentina, Brazil, Canada, Mexico, the United States, Chile, Colombia, and Peru. And you have the performance. I've selected 1 year displayed on the chart. And as we can see, Argentina for 1 year has been outperforming the others by 73%. Now, the reason why that is because the ETFs, the country ETFs, are also include exposure to the local currency, guys, okay? So all these ETFs, you have to bear that in mind, that they have exposure to the local currency. So if inflation is very high, obviously the asset prices go up to catch up with inflation. So it's not necessarily mean that Argentina's economy is exploding. It's just because the inflation in Argentina is very high that it's outperforming the other ETFs. After that, we have Peru, probably similar situation with inflation there. Then we have the United States at 37%, Canada 32%, Colombia 25%, Chile 9%, Brazil 7%, and Mexico barely 2%. Okay, what else do we have? If I unselect the Americas and I go to Europe, first of all, you'll see that there's way more ETFs in Europe. You pretty much have all the major economies in Europe. We have France, Germany, Greece, Italy, Spain, Switzerland, the United Kingdom, Belgium, Denmark, Ireland, Finland, Sweden, Austria, Norway, the Netherlands, and Poland. Now, the outperformer for the last year has been Poland. Poland has been doing very well. Now, it's really at the end of 2023 there that the gap was formed, and then it kind of stayed at the same gap with the rest of everybody else, but clearly outperforming all the other countries. Interesting to see the situation that's going on in Poland at the moment. And all the others are kind of in a similar range. After that, we have the Asia Pacific. So what do we have? We have Australia, China, Hong Kong, India, Japan, South Korea, Taiwan, Singapore, Vietnam, New Zealand, and Indonesia. Now, interestingly, if I zoom out to the 3 months, we will see the Chinese ETFs, so Hong Kong and China, blowing up about 30% up in the last 2 weeks, really. The China trade, the call on China is ongoing at the moment, so this is why we have this displayed. But if we zoom out a bit over 1 year, we can see how all the different economies have performed over 1 year. Lastly, I'll go over the Middle East. Africa, we have Israel, Saudi Arabia, South Africa, the UAE, which is Dubai, Turkey, and Qatar. Now, you can trade these ETFs, and what I would recommend you to do is you go to Trading Economics, right? And you go to the manufacturing PMI page of Trading Economics. You'll arrive at the world view first, and you will need to select the PMIs by sorting them in order. And then you'll have all the PMIs around the world. The last data point, which is September 2024, where I'm recording this at the beginning of October. So these are the fresh numbers of the previous month. And what you can do, it's a little strategy I have in place, and it's been working quite well actually, is to trade these country ETFs with a very small leverage, right? It's very low risk actually. There's not a lot of volatility because these are indices, right? And you can sort through the PMIs. For example, if we select the European region and we look at the PMIs for all the countries and compare the PMIs between the constituents of the EU or the European region, we will see which countries have a high PMI and a low PMI. And just for a reminder, the PMI is a Purchasing Managers Index. I have the manufacturing PMI here, but I could pull up the services PMI as well, which is very similar. Actually, let's just do that if I find it right there. Services PMI, let me just pull that up. And we have it here, and I'm going to go to Europe, and we have it here. So we have the manufacturing PMI and the services PMI. We jump back to manufacturing here. And as I said, the PMI Purchasing Managers Index, which is a survey, monthly survey to gauge the health of the economy at a point in time. And it's heavily followed by investors and fund managers, because anything above 50 really means the business activity is going up, the economy is expanding. Anything below 50 means it's not good. The economy is actually contracting. So, for example, as we can see, Spain has a PMI of 53. Now, it usually doesn't vary that much month on month, and especially for developed region. And I can tell you, I've been following the PMI numbers for a while, and it's been in that order since the beginning of the year, really. Spain is at the very top, and all the others follow in a similar fashion. So let's say you were at the beginning of the year and you see this list of PMIs, and you compare the European countries between each other, and you see, okay, Spain is outperforming all the rest at 53. It's growing month on month, every month. And then let's say I would go long this Spain country ETF. I will short something against it to hedge if something big happened and volatility or the VIX spikes up and everything goes wrong. Well, I'm gonna take a hedge. So I'm gonna go short another country ETF, probably in the same region. So it's very it's highly correlated to the Spain country ETF. And let's pick, for example, somewhere down there, France, 44, right? So it's contracting, the economy is contracting month on month. In Spain, the economy is expanding month on month. Spain, 53, France, 44. So let's go back to our ETFs and see how that would have performed. Let me unselect my Middle East, going back to Europe. I'll select Spain here and France. So how that would have worked out for us? Well, obviously, if we go short France, we would have lost money because the ETF of France has gone up to 17%. However, Spain has clearly outperformed France at 34%. So we would have netted the difference between the two, which is about 15, half of that, 15, around 15% profit based purely on the economic data. So that's really powerful, right? Because as you can see, they are correlated when the market for exogenous factors, external factors, they will move together and they will cycle together. So the hedge will work properly in this instance. So yeah, that's a great idea to do it like this. We could look at the other regions and do the same thing. If we go to the Americas, for example, Brazil is at 53, and we're not going to pick the US because the US is developed and it's obviously it has a low manufacturing, but there's too much money there, so this is not a good idea. Maybe something like a developing region as well, like Brazil, like Mexico, which is a 47, which is under 50, so contracting. Let's see if we have put a hedge like this, if it would have worked out for us. So let me unselect France and Spain and select Brazil and Mexico. Okay, once again, the spread here is that Brazil has done 8% and Mexico has done about 2%. So you would have made the difference between the two, the spread, which is what, 6%. Now these are unleveraged, so you could have leveraged, 2 times, 4 times, 10 times, and then you'll obviously will get the multiple of that. But as you can see, this works out in the end. And you could do the same in Asia, for example. Let's pick India. India has a massive PMI. If we go to the services, see India 57, Sri Lanka 65. But yeah, India has been killing it for the past year in terms of PMIs. I've been following it very closely, and so we could have go long India and maybe short something that is contracting, like Vietnam or South Korea. Let's pull up both and see what happens. So we go long India and short either Vietnam or South Korea. So South Korea, Vietnam. Okay, so India has done 30% over the year. South Korea has done 11% and Vietnam has done 2%. So actually, if we had picked Vietnam, for example, we would have made the spread between the two, so about 28%. So if you had been leveraged by 10 times, you would have made 280%, which is pretty insane considering this would be a hedged, which would be kind of low risk, right? You would be hedged against a market shock. So you would have easily made a very decent return, even a 2-time leverage. That would be like 60% over a year. That's pretty insane. So yeah, guys, I invite you to check this out. Check the countries tab ETF. Check the manufacturing PMIs and services PMI and trading economics. And by the way, on Koyfin uses an API that pulls all the data that's on trading economics. So you could build a dashboard, your own dashboard of PMIs and other economic data directly on Koyfin if you wish so. That's pretty cool. Okay guys, that's it for this video. Thank you for watching, and I'll see you in the next one.